it's important to understand what builder codes really unlock for the Hyperliquid ecosystem.
Thinking about both the buyback machine, that's easy to quantify, but what's hard to quantify is the amount of growth that Hyperliquid can experience, because liquidity begets liquidity.
What is that like, kind of going back and forth with Arthur? Used to trade on BitMEX, now with Hyperliquid, you guys are on the same team. How has that dynamic changed?
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X.
Hey, thanks for having me. Happy to be here. I want to make a similar disclosure. Obviously, I own Hype. Very, very bullish on Hype. We'll be talking our book, and obviously, I run Insilico Terminal as well. So, any promotion of usage of that platform, I may be slightly biased. I'll put it that way.
Man, I gotta ask, Flood. Rob and I have been following accounts like yours and yours specifically since probably late 16, 17 into the 18 cycle, and you've had the singular PFP for so long. Man, what prompted the change, man?
I think we're undergoing a fundamental shift in crypto.
Okay.
I think we're finally seeing the rise of long short actually mattering, and retail that's been able to stick around has grown up. I mean, we've all kind of grown up together since 2017. And I think now we're no longer bamboozled by, people writing venture checks or all of this vaporware or all of this, sort of fluff around infrastructure and this dream that was promised back in 2017, 18, either Delta days of permissionless finance. I think we've seen that there has to be trade-offs and compromises, right, to make sure that user experience is comparable. And that's where we're getting to. I don't want to go too deep into it. There's some deeper lore as to why I changed the profile picture, but I think we're undergoing a regime change in crypto. People are tired of being fed bullshit. That's the reality. Like, people are tired of being fed these overfunded, low economic utility, low general utility tokens. And that's why you're seeing such a surge around Hyperliquid and other, I think, things that are capturing, market share by doing things right on multiple levels, both from a product perspective, token design perspective, and fundraising perspective.
Yeah, I mean, we were just talking about Echo's Sonar release for kind of bringing ICOs back in some capacity. Obviously, we've gone through an entire, the infra bloat, the FTV, there's been an entire transition. So, I think we're getting closer back to the crypto ideals that, as you said, that we were kind of promised. So don't need to harp on that. But what I think a lot of people want to hear about is this James Wynn and your take on this. So for someone to be up 80 million on Hyperliquid, the $1 billion position open, obviously 40x long short, kind of been flip-flopping, then now close to negative, reloaded another $250 million last night in long. What is the psychology of a trader like James Wynn? It took him 70 days to go from 0 to 87 million, and then 5 days nearly to lose it all. If he was listening right now, what would be your message to him as well? And what do you think his psychology is?
I think we're very fortunate to be able to view this stuff and this this data being accessible to anybody for completely free. Like, before, only a select few of centralized exchange insiders and account managers were able to see and potentially leak info on large accounts, and their P&L and how well they've been doing, right? Because that data was completely private. And now we're able to, watch people impale themselves on leverage if they choose to. But I think the perspective of someone like James Wynn, I don't know that I have any advice for them. I think their path is pretty preordained. I think they're going to do what they want to do, and they want to gamble. And it's your right to gamble, right? And I don't think there's a greater casino in the entire world than Hyperliquid, because if you want to place $1 billion bet and have it be verifiable, provably, and have everybody in the world be able to tag along in real time as to what your P&L is, there's no other venue that can facilitate that other than Hyperliquid. Theoretically, you could buy $1 billion of ETH and deposit into MakerDAO and leverage up, right? So there are other venues you could do this on, but those aren't as sexy, and they don't offer the same amounts of leverage that Hyperliquid does, or that quick dopamine rush where he was getting in and out of $1 billion positions. I tell him, I think, if your goal is to get a lot of attention and you truly have an infinite amount of wealth, he's probably doing things optimally. If he does want to make money, I think he should be a little more particular about how he's executing, because he is just losing a lot of expected value that way. But some people don't care. And I think we're lucky to tag along to this degenerate's ride, before it's really only CZ and his crew who'd be able to view a position like this, and I'm sure they have a dashboard with all this stuff at Binance headquarters where they view all the large whales and their liquidations and their risk. But it's we're really fortunate, actually, and that's kind of one of the coolest things about Hyperliquid is access to data. It's completely free. It's a level playing field for anyone trying to use positioning data, leverage, trade data, historical P&L as actionable alpha. Anybody can do it.
Yeah, back in the day, it was just Arthur Hayes counter trading everyone on his insurance fund who had access to this data. You recently went back and forth with Arthur a little bit, just kind of setting up. I think he's also on the hype train. How what is that like? Kind of going back and forth with Arthur. Used to trade on BitMEX. Now with Hyperliquid, you guys are on the same team. How has that dynamic changed?
I mean, I've been lucky enough to, I've been fortunate enough to consider some of the BitMEX founders, I would say, friends, and work with them on some things. I respect them a ton professionally, and I don't think they get enough credit for really pushing the perpetual swap as far as it could possibly go, with 100x leverage and all of the early infrastructure that they built. It was pretty crude. I think BitMEX's infrastructure, I think I remember it being 70 orders per second, not trades, but orders per second back in 2017, 2018. So it's kind of a miracle that they were able to facilitate as much volume as they did. But they also don't receive enough credit for never, knock on wood, having any security issues or any hacks for user funds. I think that in this day and age is almost the only thing that I really care about from an exchange side. And the fact that they haven't, I think they deserve a lot of credit for that. They did things correctly. They implemented best practices, and they're extremely talented and bright individuals. And, but yeah, I mean, Arthur's someone, he's a hero of mine, I mean, he's pulled out, some of the largest capital in crypto in a fairly ethically way by building a product that everybody wanted. I don't think there's any better way to make money in crypto. And, credit to the BitMEX team. And yeah, they've lost a considerable amount of market share, but, they sort of live on to fight another day. But there's no one better to champion Hyperliquid than someone like Arthur, who recognizes how high stakes these exchange games are and how much money is on the line. I mean, I'll say this, and my figures could be slightly off because I don't have detailed data, but people fundamentally misprice Hyperliquid. And Arthur is one of the people who actually has the best pricing and probably the most edge on it. And there's a reason why he's so bullish. It's because people don't realize the global perpetual swap market is anywhere from $20 to $30 billion in revenue a year. I mean, Binance conservatively makes $10 billion a year in revenue, right? Not net profit. They're not as lean as Hyperliquid is for many reasons. But Hyperliquid does about 1/6, 1/7 the volume that Binance does on perps, sometimes less, sometimes more. Let's call it 1/10 for easy math. If Binance is making if Hyperliquid is making $1 billion a year, that puts Binance at, which they have higher revenue per user at, conservatively $10 billion a year in revenue, and that's just from perps. That's not including spot. That's not including their yield products, revenue from the launch pad, their mark-to-market value from BNB. So we're really seeing, I think, the unbundling of Binance in real time via Hyperliquid and all of the things that Hyperliquid will enable, from builder codes to HIP-3 to self-custody to protocols built on top of it, front ends built on top of it. Binance's many businesses rolled up into one. And this is sort of the unbundling of that, I think, which is incredible to see in real time.
So then if we were to ask then on a follow-up to that, what you think is not priced into Hyperliquid, would that be, is it mostly around the way people are thinking about it? Or is there technical or roadmap or kind of other items of hype that people are not kind of thinking about and that aren't priced in? Or is it just mostly the kind of thought process around how to value it?
Yeah, it's an informational asymmetry, right? When you're thinking about both the buyback machine, that's easy to quantify, but what's hard to quantify is the amount of growth that Hyperliquid can experience, because liquidity begets liquidity, right? Market makers and traders are pretty neutral when it comes to the venue they trade on. I trade on multiple different venues. I trade on Binance, I trade on Bybit, I trade on OKX, and I trade on Hyperliquid, and I trade on chain, right? So, valuing Hyperliquid comes from, or the reason why there's an informational asymmetry is people don't realize just how profitable these exchanges are. Coinbase has obviously a different model where they're a much higher take rate, and they're charging 60 basis points out of the box for spot, but they have 6.5 billion in revenue a year, and a few billion of that comes from trading, right? So Hyperliquid is still in the very early innings of its potential growth, and people are not valuing the token appropriately, in my opinion. We're still buyers up here. We've still been net buyers almost every day, right? And we have topside vol exposure, so obviously I'm biased. But yeah, happy
there's
to
been
elaborate
rumors,
on it.
Flood, that there's been rumors that you've already dumped well over 8 figures of hype.
I mean, people. I mean, I can say that that's definitively not true. But there's a difference between being a net seller on one venue and using it to market make. We actually haven't been market making much of the hype spot, so we haven't been net sellers generally. Have we sold some at times and bought it back? Yeah, I mean, I'm a trader, right? And the purpose of investing and trading is to buy things low and sell them high, right? And your time duration for doing things may differ, right? I may buy something and sell it a minute after. I may sell something and buy it back a month after, right? I mean, it's your right to buy and sell assets whenever you want. But
No, I'm not saying that it's a problem.
Of course. Yeah. I mean, I don't know.
I just want to clear the air here.
People love to speculate on things. We have been, and it's easily verifiable if people have any amount of on-chain diligence, much larger net buyers than net sellers of Hyperliquid. Plus, we have millions of dollars worth of premium in Hyperliquid call spreads, right?
Yeah.
In hype call spreads. So, that's
Arthur
as
was
degenerate
about that as well.
That's as degenerate as it gets for upside exposure.
So I think there's a bit of a war going on right now. Hyperliquid and Solana. Basically, my perspective from the technical lens is Solana's gone out and be like, well, Ethereum's slow and expensive. We're just going to create a bit more of a centralized, faster, cheaper chain, less validators, scale it up. Hyperliquid came in even more on the logical extreme, was like, well, Solana's not going to do it for a highly performant perp stacks on chain. We're going to do it this way, less validators, way better execution. And you put out a tweet saying that just like ETH, Solana is fundamentally uninvestable. I think this Hyperliquid and Solana dynamic is getting a bit stronger over the last couple of weeks to months. People are talking about hype flipping SOL. What's your take on this dynamic right now, and why is Hyperliquid, in your view, much more investable than SOL?
I'm gonna sound pretty controversial and inflammatory here, but I think a lot of my views are rooted in examples from traditional finance, and they're not always directly corollary, but I think they do matter in this example. I think most L1s are commodity businesses. And if you want to own commodity businesses, that's fine. They tend to do pretty well. Railroads are still businesses today, but they are commodity to some extent, right? And the person that is shipping goods does not care which vehicle they ship on, whether it's boat or train or truck or camel. They just care that it gets to the destination and that it is as efficient and cheap as possible, and it fulfills all of the things that they are optimizing for. Users who will use blockchain technology knowingly or unknowingly to trade and transact values will not be deterministic for which chain they are using. In fact, they may not even know which chain they're using because it will be wrapped in a wallet or wrapped in a front end or wrapped in some sort of very pretty UI that lets them do things more efficiently, right? So what do I mean by this? You can imagine that trading for a business like Robinhood, which is a front end, right? And front ends receive the majority of value in traditional finance. If you take the market caps of front ends, what do I mean by a front end? Robinhood, Interactive Broker, right? Vanguard, Fidelity, Schwab. Schwab has 10 trillion of assets under management. These are front ends essentially that allow you to plug into all of the matching engines and trading venues all across the world, right? And well, specifically for the US, but theoretically all across the world. The user doesn't care if they trade on NYSE or BATS or NASDAQ or CME or CBOE. They just care that their order gets filled, right? And they care that it's the cheapest and fastest to get filled with the best, ideally, user experience as possible. I look at blockchains very similarly, and I think blockchains are a very dangerous bet because you're inherently betting on technology not progressing and you not getting leapfrogged by advances in tech. That's what happened to Ethereum. And again, I'm not a blockchain researcher. I don't really care about layer ones. I think they are commodity businesses. I'm more interested in the front ends that will actually own the user. But you can imagine a user executing through Robinhood. They have no idea what chain their orders are being routed on. They have no idea what venues their order is even hitting. The order could be multiplexed to multiple different venues. It could hit Coinbase and Binance and Hyperliquid and a Solana AMM pool, and they would have no idea because they are basically just trading and using and thinking about their order execution through Robinhood. And Robinhood will not care what blockchain in most purposes will power this type of trading. So these really are just commodity businesses. I don't understand why an AMM is a moat. An AMM is a constant product, right? There is nothing revolutionary about putting two equal amounts of an asset into a pool and having it rebalance. There is nothing inherently that is impressive about this or that is a moat. And if you believe that chains will get faster and cheaper and potentially more decentralized, then fees should also go down to zero. And people keep saying, well, network effects will make it so that this chain is valuable and there'll still be a layer one premium because people will want to use Solana or they've solved UX. No, they haven't. It's the front ends on Solana. It's Phantom Wallet that owns the user. Users don't even really understand if their Solana was wrapped in the back end, right? And then shifted over to another faster, cheaper chain where they got better instantaneous settlement. And then when they inevitably make a withdrawal or a transfer, then it's unwrapped and transferred back to the chain of origin. There is no way that users will, I think, be voting with their wallet because of a certain type of chain in the back end that they don't even interact with themselves. That's why I think these are commodity businesses. And I don't see how it's not a race to the bottom either, right? Like when you have custody over funds, it's a moat. Because you can enable different types of trading at low cost or no cost or micro loans and other types of, inter-client payments and margin lending and capital efficiency usage. Like blockchains don't really do this, right? So anyways, I'll let you guys, I have pretty strong views on this.
This is fundamentally an argument for the Fat App Thesis. Yeah,
absolutely. Yeah. And you just have to look across the river at TradFi and understand that the aggregate market caps of these front ends of interactive brokers, Schwab, Fidelity, Vanguard, Robinhood, Webull, etc., are larger than CME, NYSE, NASDAQ by a factor of 2.5x, 3x. So the value does go to these because they actually own the customer. And, that's why I think Hyperliquid is actually very smart for saying, no, we don't want to go for the entire pie. We are fine with someone building a front end, users not even knowing that Hyperliquid is the base CLOB or liquidity layer, and being essentially just the best matching engine and central base of liquidity. You can own the user, you can add additional features and fiat off-ramps and all this other stuff. We'll let you own those businesses and monetize them and differentiate how you want. But we will be a commodity business, but we're fine with being the best and most efficient one that lets you monetize, right? And Solana might win the L1 war. That's fine, but I don't think that makes it worth $100 billion.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yields on institutional-grade liquid staking with mETH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Tired of multi-chain headaches? You need Omni. Omni makes being on-chain feel like you're online. Perform any action on any chain in less than 2 seconds. It's all powered by SolverNet, Omni's breakthrough SDK for cross-chain speed, scale, and cost. To kickstart adoption, the Omni Foundation is offering $10 million in rewards for SolverNet-powered apps. Start earning today at omni.network. Yeah, that is, I appreciate the candid thoughts there, because I think that, if you're going to put the elephant in the room, you might as well say how you feel. And what's important is that you're backing this with Insilico, with your personal brand, with your investments. And so, this war is going to rage on. The Solana people would say otherwise, and they would clap back and just, talk about centralization, or talk about, lack of an ecosystem, et cetera, or different metrics like REV, ways to value these things. But we can save that one for a different day. Curious more, again, going deeper into Hyperliquid's evolution. You spoke a little bit about builder codes, but I think it's important to understand what builder codes really unlock for the Hyperliquid ecosystem. Maybe you could just kind of give your thoughts and your take on what builder codes really unlock for Hyperliquid.
Yeah, it's very simple, right? So if I had to build, for those not familiar with what Insilico Terminal is, we are an execution system where, financial tooling for, it's typically called an OMS, an order management system, or an OEMS, order execution management system, to facilitate better trading for free for retail users, right? Basically, any user could use it, but primarily our users are retail. We're essentially a reskinned UI for all of the top venues, and we give you access to differentiated order types. So what does that mean? That means TWAP, VWAP, limit chasing. You can fully customize your UI, so it looks exactly the same and it's uniform across different venues. You can trade on multiple venues at the same time from one consolidated UI, and you can imagine most serious traders see tremendous benefit from using this type of software. It's all completely free. We receive affiliate and broker commissions, which is basically like rev share from the exchanges. And we don't collect any user data, personal data, PII, stops, P&L orders, anything, because privacy is our first and foremost focus. I think builder codes, what they enable at the core is a way for you to permissionlessly monetize. And that is important because this is what most blockchains enable and is the reason why they have, I think, accumulated quite a bit of trading and speculation and incentivization to build things on top of them, as opposed to building it on top of Coinbase or building it on top of Binance. If you were to build some sort of execution tooling, which is basically one of the primary use cases for builder codes, if you wanted to charge an extra basis point for your Binance customers, you either have to ask permission from Binance and they will tell you no, right? Or you have to find some sort of high friction way to charge the user themselves and settle up a bill. You basically have to invoice them, which is horrific because imagine you have a losing trading month and then I send you a bill for 30 grand for your execution for that month. You're not gonna be very happy, right? So that's why we've kept our business free despite being able to charge for it. I think it's important for this to be just a net good, like a general net benefit for most crypto users. And we have other plans once we accumulate enough flow. And we want to own all of the execution. But what builder codes enable me to do is if I wanted to, I can charge 1 basis point or 10 basis points if I thought I could get away with it. And Hyperliquid can't stop me, right? And that's never been possible on any CLOB in history. Like if you were trading options on Deribit and you built a really cool options trading bot or something, or you built really cool analytics software and you had execution bundled in that app, you have no way of charging other than through the gated broker and affiliate programs on centralized exchanges. Most people don't understand this, but you're basically at the mercy of CZ waking up one day, which he has in the past, and saying, okay, 50% of your users, you actually can't monetize them anymore. He slashed monetization from VIP4 to VIP2. So Binance, went from one of our most profitable venues to facilitate trading on to one of our least profitable venues to facilitate trading on, right? And they do this randomly because you're in their sandbox and it's their right to, right? I mean, it's just business at the end of the day. You don't take it personally. But Hyperliquid is allowing for the first time on derivative trading the ability for you to permissionlessly monetize yourself. And that is incredibly valuable. That's incredibly valuable. And most people don't understand why, because they haven't tried to build a product or thought about what monetization looks like. But this will enable and this will coordinate people to build exclusively on Hyperliquid. Even if Drift adds broker codes, even if DYDX adds broker codes or builder codes or some sort of revenue sharing program, they don't have the user attention and volume. Hyperliquid is already too far ahead of them, right? So this will enable products that we haven't even thought of yet and will incentivize that sort of speculation and time exchange for time to build a product, because you can actually have some sort of monetization on it in a way that has never been historically possible.
Flood, thank you so much for joining and talking Hyperliquid. Just one last thing for you. Do we think that there's a world where Hyperliquid flips Binance and perps volume in 2025 or 26, or what's it going to take to get there?
It's impossible for it to flip. Well, not impossible. Nothing's impossible, but it's very unlikely that it flips Hyperliquid Binance volumes in 2025, just because Binance has such a commanding lead on the spot market. And spot and perps go hand in hand. Additionally, there are some other capital efficiency things that Binance extends to you due to them being like fully custodial and stuff that enables better capital efficiency and higher rates of leverage for certain market makers. They also, and I don't have any proof of this, but I can imagine that if you're an extremely large trading firm, they'll issue you credit knowing that you have a balance sheet of $1 billion or something, and they've audited you or something, that they can extend a credit of 50 or 100 million. Like Hyperliquid will never do that. Like Hyperliquid won't even pay 30 grand for their TradingView implementation, right? Like Hyperliquid has a strict policy of not paying anybody for anything ever. So the people that are talking about James Wynn being marketing, they're as far as I know, it's a lot. And I would bet a lot of money that it's a lot. But in 2026, it's entirely possible because Binance is in a really tough spot. They don't do regulated trading better than Schwab or Coinbase does because they're inherently not a US Nexus company. And they don't do, permissionless trading or push the boundaries of finance and maybe open up discourse around, KYC and permission. Like Binance is inherently a permission entity with a lot of baggage. So I think 2026 actually looks pretty rough for Binance, where in crypto you get killed when you're in the middle. When why did Ethereum lose to some extent, right? It's because they tried to be both Bitcoin and Solana. When you try to do two things mediocre, you typically end up atrophying substantially, right? You need to focus on doing one thing the best and then add other types of edges and products and features. And that's just pretty standard, like first principles thinking. And I think Binance is in a tough spot. So 2026 could look very different. 2025, Binance spot market is the only spot market in the world other than Coinbase's that matters right now.
Flood, thanks for joining, man, and best of luck on your hype journey. We are riding with you, and
well, glad to hear it. It's the only asset that matters in crypto other than Bitcoin. Like, it's very simple. It's very, very simple. Nothing else makes money.
Speak to you soon, man. Cheers.
Thanks, Flood.
That is the Hyperliquid 𝗵𝗆 right there.